Three, two, one, and we're live. It's Eric with Option Edge. I'm coming at you late night. I'm looking at PayPal, okay? We have PayPal earnings, not official. They haven't been announced yet, but estimated earnings are for July 28th, okay? So that puts us at approximately 45 days before earnings, and we have historically have seen the 45 days before earnings. If you open up a diagonal spread, we buy the 50 delta with the 45 days till expiration, and then we sell the 30 delta with the 37 days till expiration. You do that 45 days beforehand, and historically we've seen a great win rate of 87.5% with a total return of 910%. So the average win was $413, average loss $42. So I like those odds. I mean, obviously, historically, just because it happened before doesn't mean it's going to happen again. But with crypto heating back up and Bitcoin heating back up, and PayPal is now accepting, is part of the crypto ecosystem and is a little bit of a proxy for Bitcoin. When Bitcoin goes up, PayPal tends to go up. So let's take a look at the chart. So I have PayPal right here, and you can see we're at the top of the Bollinger Band. So one of the things, and we're hitting we're hitting resistance here that has been we're hitting this resistance right about here. That's been since February. Okay, so that is pretty big, decent sized resistance. Let's take a look at the let's do a little anchor VWAP, see what we get, but when we anchor the very tippy tip top. So, okay, we have some support underneath here, but so I wouldn't be surprised actually if we do see this trade come down a little bit. We see PayPal start to come down. If that's the case, I might add to this position. I already opened up. I opened up this strategy, so this is why I ended up choosing. So my 50 delta strike was the the $275 call with the August 30 expiration, and then I sold against that slightly more out of the money, a 30 delta $285 strike call that expires 1 week earlier on July 23rd. Okay, so I'm just going to click on each one to show you. So this was approximately, let's see, so the delta is a little bit higher than 30. So overall, this is about a delta of like 15 when you subtract the two. So directionally, it's like owning 10 shares of PayPal, more or less. And then let's just take a look at our deltas here. So the delta is 52. Okay, so it's about a 17 altogether. We have a 17 delta, so that's our total directional exposure. And I've been requests that some people have made to me is, hey, let me show me on Robinhood how to put in this trade. So so this is on the desktop. On the desktop, obviously the phone is different. So we're going to go for the first strike for the strike we're buying, the call, the 275 call. Select the expiration date that we want, July 30th. You can see I have a +1, meaning I already have this trade on. I'm going to click the plus. That adds that here, there. And now I'm going to go down to July 23. And we're going to flip from buy. So you can see we're on buy the call. Now we're going to sell the call. And we're going to select the 285. And you can see instead of a +1, we now have a -1, indicating that we're shorting that position, that strike. So overall, we get, this is our total. So one good thing about buying diagonals is they reduce your overall costs versus if I was just to buy the 50 delta 275 strike alone. Okay, so this reduces some risk, which is great. And another thing about these diagonal trades is I've talked about it a little bit before. I haven't gone into it completely, but it basically protects our delta, or excuse me, theta decay. So we're getting short theta during the right time of the option. So looking at the P&L graph here, which I actually really like what Robinhood has done. It's done a good job of making their options platform a little bit more user friendly. So you can see the max profit point is going to be at the 285 strike. That's the exact strike we're selling, so it sort of makes sense. So we can make almost 500 bucks on this trade, which is great. What else do we want to look at? Also, let's visualize it here. So this is on E-Trade. So I have the blue line is set to be 3 weeks from today. So that's July 5th. And we have the P&L for July 23rd, which is the date of the first expiry. The 285 strike expires on July 23rd, and that's when we would close this contract. We're not going to obviously, you can always let this call expire out of the money, go to zero, and then hold on to the 275 July 30th call if you want. But I'm going to close this. That's the game plan. I'm going to close this on the 23rd. So you can see. Let's see if we don't. Our break even is at 278. So ooh, that's my dog. Even if this moves barely at all, we're still gonna not gonna lose much money. Currently, we're at 274, so we just need this stock to move $4 to the upside to get us profitable. Yeah, so that's it for PayPal. I hope that helps. Please message me if you on Twitter. My handle's Option Edge 1. That's number 1. Give me a follow and hit me up, DM me. We'll talk options. I love to talk options. All right. Have a good night, everyone, and happy trading. Bye-bye.